Ladies and gentlemen, welcome back to the channel. To many surprised investors today, Tesla stock started off the day on a pretty good note. At one point, the stock was up almost 2%. It looked like we were actually going to see a break, out of the 330s into maybe the 340s or 350s. But there was some news that came out, and it was very difficult to find. Surprisingly, it's not something that's really being talked about much, at least on your typical sites like on X or on even, Discords or whatnot. I couldn't find out what was going on to Tesla until now. And it kind of explains why the stock sold off so much today. And this might be a bit of a surprise to you because you may think this has already happened, but this was new information today. So, Donald Trump signs a resolution blocking California's pro-EV rules. California Governor Gavin Newsom said in a statement that the state will be suing to stop, quote, this latest illegal action by a president who is a wholly owned subsidiary of big polluters. Well, that's a statement. President Donald Trump signed 3 resolutions on Thursday, barring California from mandating electric vehicle sales and setting tailpipe emission standards designed to galvanize the transition away from combustion engines. The resolutions undo California's 2024 landmark decision to ban new gasoline-powered car sales by 2035 and revoke the federal waiver that allows California to set its own tailpipe emissions standards under the Clean Air Act. 17 states representing 30% of the U.S. vehicle market had adopted the plan, which Trump has called California's EV mandate. So when you look at some of the numbers here, they're large, okay? Just California in general, it would be the 5th largest global economy if it was its own country. But a majority of, or a good chunk of EV sales in this country, in America, take place in California. So it wasn't just Tesla today. Tesla was down 2.24%, Rivian was down 2%, Stellantis down 2%, Ford down 1.15%, even General Motors down 1.22%. But you can definitely see EV stocks took it a little bit harder today, and today was really an uneven trading day to begin with. The S&P was up 0.39%, mainly just led by a couple different stocks like Nvidia up 1.5% today. Microsoft did well today, up about 1.5%. Amazon break even, Apple up a little bit, offset marginally by Meta being red and Google being down about 1%. It was a very uneven day today. Even though the S&P went up, a lot of stocks did not do well today. This was not a great day for many of our portfolios. And specifically, again, for Tesla, I don't know why this is not getting a lot of coverage, especially on X. It's kind of difficult to figure out what happened here, why Tesla stock was down today. But if I were to put something on it, it is probably this, mixed with just broader weakness in the markets because of some of the Middle East tensions. It seems like every time we would get a headline about potentially attacking Iran or Iran not being allowed to have a nuclear weapon or talks that are failing, essentially, the markets would take a move lower on that. Now, when it comes to conflicts, unless it's with China, I don't think it matters. Okay, I think it is a buying opportunity. I think any sell-off that you get on that is something you want to take full advantage of. So I don't know if we're going to get a larger sell-off because of that. I doubt it. But if we do see downside pressure, you want to take advantage of it. Now, ultimately, we get the launch of the robotaxi to the public on June 22nd. Today is June 12th. They are doing autonomous robotaxi rides in Austin right now, but it's not the launch that we're waiting for. Now, the launch in and of itself does not matter. It never mattered from the start. The only thing that matters is guidance. How fast is this thing going to scale? Is it going to scale fast or is it going to scale slow? That is the difference between Tesla stock, soon to be a $400+ stock, or potentially falling back a little bit, retesting that $300 level as support. Okay? That's the only thing that we really need clarity on at this point for Tesla stock to start to move dramatically higher. And I do think over the next 6 months, Wall Street's going to care a lot less about Tesla's sales numbers, even though I think they will recover and hold up. I'm not forecasting any kind of disaster coming this year for Tesla deliveries or for the broader economy. I don't think it's going to be like a red hot, crazy year, though. Like, you could recover a little bit, but be kind of break even with last year's numbers. That would actually be pretty good. And again, I don't think it matters because I think the focus is going to be more so on AI, especially as the markets realize we are entering into a multi-decades long AI Cold War with China. This is going to be the biggest revolution we have ever seen in this country from an investing standpoint. And I want you guys to ask yourself, when you look back, fast forward 20, 30 years into the future, and when you're looking back, you're going to want to be able to say to your kids or grandkids or whatever that you were there at the start of the AI revolution and you made a bag from it. You became very rich from it. You do not want to look at your grandkids and say, I waited. I was nervous. I didn't know what to do, so I did nothing. I mean, doing something is probably better than doing nothing at this point. In my opinion, obviously, I'm not a financial advisor, I'm not a financial planner, but it's pretty easy to see, in my opinion, again, not a financial advisor, you could lose money if you blindly invest capital based on what anyone says, ever. Just know that. I think, personally, Tesla stock is the easiest, clearest long-term winner of AI. Humanoid robots and robo-taxis, give me a effing break. There's no other market that comes even close to that. Potentially NVIDIA, longer term, because they're going to have to go into the robots and stuff. But besides semiconductors and NVIDIA, there's nothing that comes close to touching Tesla's TAM, the total addressable market. Even like, you think Apple's TAM is large? No, you haven't seen anything yet. Tesla's TAM is magnitudes bigger than that. And that's why any dip we get, any fear that we shall get in Tesla, I think is a massive opportunity. Now, with that said, take a listen to what Altimeter's Brad Gersner says here. He says, the economy is ready to cook. This is an individual that is very smart, that has made incredible investments over time, that takes what seems like more of a strategy that retail investors take, and that is finding the big winners and going heavy in those big winners. And he actually thinks right now is the calm before the boom boom, aka the calm before a big market rally. So take a listen to this.
Sir, it's good to have you back, and it's great timing, and no offense taken at the fact that you'll only wear a suit if you're going to the White House. Sort of figured that, and this is what I expected you to be in today. And we'll get to all of that a little bit later. But I do want your current market view, because I know you did get more bullish on these markets towards the end of April and into early May. And here we are, as I said at the very top, we're just a couple of percentage points from a new all-time high on the S&P. So give us the lay of the land as you see it.
Well, Scott, it's great to be here. Thanks for having me. And when we talked in early May, what I said was the reason we had turned, right, we were negative heading into Liberation Day because the administration had not made clear. There were two doors they could follow on global tariffs. I described the first door as what nuclear Navarro, $1 to $2 trillion in global tariffs, returned to a McKinley age, the late 1900s, where we derive most of our revenue from tariffs. And the other one was what I described as fair trade Besant, landing the plane closer to $300 billion in annual tariff revenue. And that was, by May 2nd, that had become pretty clear that that's the direction the president was headed. Now it's even more certain that that's the case, right? We're on the verge, or it looks like we have a deal with China that will be one of the most important ones. We're tracking ahead with Europe. And so I feel very comfortable where we're going to land the plane on tariffs. Secondly, it looks increasingly likely that the reconciliation bill, what it describes as the big, beautiful bill, will in fact get signed into law in early July. That will not only give certainty to the markets about the extension of the current tax regime that exists, but it also adds new stimulus in the form of no tax on tips, no tax on overtime, and the deductibility of Social Security, which is effectively a tax break for seniors on their Social Security income. So that's incremental stimulus. And then the third thing that I think is not yet being talked about is we have these rate cuts coming in the back half of the year. So I think that's the potential trifecta for this economy, an incredible pro-growth administration that is landing the plane on tariffs, that is landing the plane on the reconciliation bill, and we have rate cuts ahead. That caused us to get a lot more bullish at the beginning of May. We remain so today. In fact, we're in our top 25% in terms of our exposure limits that we have on as a firm. And then behind all of this, of course, is we have the AI super cycle. We've seen a reacceleration in both the top line and the earnings. You know, Oracle reported last night, blockbuster numbers. 80% of the S&P that reported all beat. The Mag 7 all beat and accelerated. And so I think that, you know, so long as the government does these things that I describe, I think the economy's ready to cook.
Which I wholeheartedly believe that view from Brad Gersner. I think Wall Street is way too bearish. They are way too underpositioned. They are all focusing on what could go wrong. And that's a good thing. I mean, humans have fear as an emotion to keep you alive, okay? You get anxiety so you don't die, so you don't run out in front of a bus, okay? Same concept is true in markets. The best investors are not the ones that don't have any fear or are illogical, right? And just buy stuff, okay? Having a little bit of nervousness or being cautious sometimes is a really good thing. You have to be able to separate your emotions from the facts and the reality. I see a lot of Wall Street right now that is nervous because of this reason or that reason. One I'll point out, inflation. Everyone and their grandmother said today's inflation report was going to be the first of many, like higher inflation prints. You know what we got today? A dirt low number. Nobody expected it. What did we say on this channel? We said for days now that CPI was going to come in low. We're not going to get inflation from tariffs. And what happened? We did not get inflation from tariffs, okay? That's just one example, but there's others where Wall Street is still trying to justify their nervousness, okay? They're trying to justify their nervousness and not be in markets, whereas over the next month or two, I think you're going to start really knocking out some of those catalysts that are making Wall Street nervous, like inflation and growth scares. We're not going to see these things. I think Brad Gersner is correct. The economy is ready to cook, especially if this bill does get passed. Yes, it hurts the deficit, blah, blah, blah. But no tax on tips, no tax on overtime. Come on now. That could help those consumers that are in a 3.5-year-long recession right now. We're talking average folks. And I think that is really underestimated. At the same time, you do have this AI revolution. We talk about this all the time. This is going to be a main theme of the next, 3 decades, 2 decades at least. Okay, the next 20, 30 years. AI is going to be here. It's going to be around. There's going to be many opportunities. If you are savvy enough, if you put your emotions to the side at the right moments, again, when the world is falling apart, it's the best time to buy, even though you're gonna be scared too, okay? You're gonna be fearful, okay? If you can compartmentalize these things and act at the right time, you're gonna make a lot of money. And we acted back when markets fell just 20% here recently. But I think right now, you're at the beginning of another 20% rally over the next 6 months. And I think Wall Street's going to be just shocked. Once you break new highs on the S&P, you're going to start a chase. I don't know what day that's going to happen. Okay. But even from a technical perspective, it looks like it could happen at any moment. We're like 1% away from this. And there is some real resistance. Like even with the good CPI report that we had, the good PPI report that we had, you know, it didn't move markets up that much. And it's been very kind of uneven nonetheless. But I think it's going to happen. And I think a chase is going to start. And that's going to be really positive for our portfolios. And I think especially AI is going to be in focus. One comment that I do want to make before we go ahead and wrap up this video, it was actually from Bank of America's CEO yesterday. There was a conference and Bank of America's CEO said that the consumer's fine. Consumers acting normal. They're not changing behaviors. That's one thing. But number two, he said that companies are hesitant to invest capital in everything besides AI. If that means getting that new AI bot for your employees or your Salesforce agent or, you know, buying GPUs or, you know, data centers, whatever it is related to AI, companies have no problem making those investments because you can't afford to get this wrong or to get left behind. And I think that's a very powerful force for growth in AI stocks. And that's another separate reason why I'm very bullish on AI stocks. The risk is like, imagine, you know, Google, right? Like Google could completely just get screwed if they do not capture the AI market. They can't afford to fall behind. Google actually said about a year ago on their conference call, Google's CEO said this, they would rather overspend than underspend on semiconductors. Even if they never need them, they would rather overspend and try to compete than to not compete enough. Okay? That's good for AI stocks. Just leave that there for you. And that is especially good for Tesla, in my view, as Wall Street starts to realize Tesla is the biggest AI stock in the world. It's right in front of them. Humanoid robots, that is the holy grail. And Tim Cook once said that self-driving cars are the holy grail of AI. And he was wrong. That's the second holy grail. The big holy grail, though, the number one biggest use case for AI by far, besides healthcare, is humanoid robots. And Tesla is going to dominate a certain segment, market share of that market. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.